So just when we thought that Capitec's results are not going to impress, they did once again, reporting a 50% surge in first half earnings. Strong loan demand coming through, and the company saying it's going to open up around 55 new branches. Did you expect these numbers, Patrice?
No, the numbers were way above expectations. The 50%, I think, blew everyone out of the water. And what's quite interesting is that they now have a number of revenue drivers which seem to be diversifying the business away from just lending. More importantly, their transactional income rose by close to 60%, which is very impressive.
But you know what Capitec is doing differently, in a sense that its reserve ratios are much higher than what we see on the average, big bank front in South Africa. Is that what's giving them their edge to feel so comfortable to lend?
They have a huge capital buffer because they have raised capital. Now the capital adequacy level is close to 39%. But in terms of the Reserve Bank requirement, they have to hold much more capital than a traditional bank, so they're holding close to the minimum is 25% for them. I think their edge really is the ability to acquire clients. They now have 3.7 million clients in total, which is very impressive.
Let's look at the debt to income ratios. We know overall all the banks are starting to increase this quite dramatically, and there is a concern, at least from the investor community, that this could mean quite a bit more risk down the line. Are you part of that camp, Patrice?
Yes, obviously we're always very worried when you see loan growth, in the case of Capitec, going up close to 70% per annum. One has to be wary of a bubble. It's interesting that in their results they address that very question, and what they mention is the fact that the average growth in loan installment went up 10%, whereas disposable income went up 9%. So basically saying that their customers are able to increase to afford the increase in installment that they are facing. So they reckon that in their case there's no bubble.
Is it a buy for you, Patrice? Is Capitec a buy for you?
It's a very difficult one. It's trading on a PE of 18 times, price to book of just above 4 times. It's done very well. We tend to look at stocks which are out of favor and which are depressed. I think in that case, it's been doing very well. We would not see Capitec as one of the stocks we would invest in now.
Fantastic, Patrice. We have to leave it there. Thank you.